What's up, traders? Welcome back to another market analysis, guys. Welcome back to another video. So we're going to talk about all of these pairs here that I'm looking at in my analysis on these pairs for this week. We're covering, it's February now, guys. So we're finally out of the holidays and the all the festivals and everything like that was going on through like the Christmas and like New Year's and everything like that, right? We're starting to see volatility pick back up in the markets. We had our first FOMC of the year, right? Now we're about to have our second NFP of the year, which is going to be this Friday. We're going to have NFP for this February. If you guys don't know this, for anybody that's new or just new to trading, we have NFP every first Friday of the month, okay? Just going over unemployment rates and everything like that. So if you're big on fundamentals, that is something you definitely want to pay attention to. And we're going to talk about it a little bit more. We're going to see how that's going to affect us this week. Expect the markets, just because of NFP, sometimes we might have, I wouldn't say slow moving markets, but volatility might be a little bit low just because of speculation coming from NFP, right? Depending on like if it's going to be something huge, something major, then most likely we'll see the markets kind of be slow this week until that NFP news release and we see what happens with unemployment rates and everything like that based on the fundamental analysis. Okay, so basically just don't expect anything crazy throughout the regular days of this week. Now, as we go into like, let's go into the analysis of like just fundamentals. You can kind of see we have a lot of news this week. So we're going to have volatility this week either way. But let's say a day like Wednesday. Wednesday, we have unemployment change, right? Employment change, and then we have ISM services, and then we have a bank holiday for the NZD. That day may be slower compared to like Tuesday and like Thursday, right? Especially since it's NFP. So most of these prices of all of these like job openings and stuff like that comes out, some of these might not be as volatile just because we have NFP coming out on Friday. So just be like aware of that. Doesn't mean we won't get any movement, but it just might not be as volatile or as impactful because speculation from NFP, people are waiting to see what's going on with the unemployment rates and employment and everything like that. So we have CAD and we have USD. So we have two currencies that we're hitting on Friday. We also have currencies as well as the pound. We also have the New Zealand. So we have a lot of like rates coming out this week. So basically we're going to see a lot of fundamental analysis as far as like economic change of unemployment and everything like that through most of the currencies. We have it on the CAD, the Canadian, we have it on the dollar, we have it on the pound, we have it on the New Zealand. So I think odd is coming next week. Let's see, the Aussie, CPI, or maybe I'm blind. No, I don't see the Aussie yet. But let's get into the technical analysis. I don't want to make this video too long for you guys. I have not looked at the charts. It's going to be my fresh look on the charts. So we're going to do a lot of analyzing today and seeing what we can do. I did see some adjustments on Friday that I wanted to make today. I haven't looked at the market since Friday, guys. I usually take a weekend break to look away from the markets. So let's start with DXY. As we can see, what's going on in DXY right now, guys? We're still bullish, right? We can see the price action is still going higher. We can see we have our large accumulation. We have our large push as we've been talking about. Let's zoom in here. Let's zoom in and let's talk about what we were looking at last week. So last week I did mention that I am still looking for this liquidity to be taken out at least, and for us to come into this area right here. So one of those things was met. We did take out the liquidity. We can see we have that first manipulation right here that takes out this liquidity, and we did not tap into our demand zone, which was right here, which we were looking for the market to tap off of. Why were we looking for the market to react there? Basically we're just following the market cycle. You can see we have accumulation here. We have a tiny reaccumulation, and we have a larger reaccumulation, and this might turn into a bigger reaccumulation because this will be our manipulation of liquidity here, and if we go higher, this will be our next point of interest. So in that point, I would honestly invalidate this area here because one, we have enough of a retracement coming back into 50% here. So if the market continues higher and we just breaks this high, this POI is invalid, and this will be our next POI here. Reason being is because, come on guys, this is about a couple pips, right? A couple pips difference that the market just missed this specific area at. So if the market makes this high, I'm not going to expect the market to come straight into just this area. That means we would break here, which would be a BOS, and then we react from here and take off. No, most likely if we do that, we might get a pullback back into whatever reaction here, and then we continue down into like lower areas, right? Because we would create a BOS right here. So either we, you know, turn back around and tap into this area before we go. And that's one of the scenarios that I was going to talk about that I'm looking at for this week, potentially. Zooming into that price action, what can we see? So zooming into the price action, after this manipulation down, you can kind of see we do have an accumulation down here. And another thing I want you guys to see is this invalidation right here. We invalidated this distribution. So you can see the market is actually creating change of character after we took out the liquidity. This is why also I do think potentially we can just pull back maybe and continue higher today, right? I could see, not today, but this week, I could see this happening where we continue strength in the dollar, just because that we created that change of character. We're already invalidating the opposite side of the market. We don't really have much demand up here right now. We didn't create much demand at where we're at. All we did was fill the imbalance. Let me show you guys here on the higher time frame. All we did was fill this major area of imbalance here, guys. You guys can see that right here. All we did was fill this imbalance right here. And above that, what do we have? We can see we have equal highs and we have liquidity. So trendline liquidity sitting there. So the market could easily continue going higher. And looking at it on a higher time frame, look at the daily time frame, look at these daily closers, look at these daily candles. What do we have here? This is our manipulation, this doji, and then after that we're followed by closers of daily candles to the upside. So that means this daily candle, this last daily candle, actually closed above this wick, which is that area. Hold on guys, let me mute this. I was in a voice call. All right, there we go, we're good. So yeah, you can see we actually are closing above this wick right here. You can see if we're talking about this area for potential demand, it's already been mitigated and filled from this wick here. So anything above here, we don't have any big demand. The only demand, I'm sorry guys, supply. We don't have any big supply. The only supply would be right here, which we are closing above. You can see the wick that mitigated, we got to push lower, we got more pushes lower, and then the market ended up continuing back higher on the daily time frame. So zooming into the 1 hour, where is that reaction? What am I talking about? So here's our demand zone. I keep saying demand zone. Here's our supply zone, where we had that distribution. Here's our reaction, right? This is everything that I was showing on those wicks. So when you understand the market and you can kind of see these on the higher time frame. So boom, here's that reaction, here's that pullback. You can see we have another manipulation down, takes out all of this liquidity, fills this gap right here. Market pushes higher, we get another reaction lower, and we just push higher past this area here. So with that being said, boom, once we do close above this area, which we are about to, and I expect us to, we could close above here, come back and mitigate these areas here and continue higher. Continue a lot higher. Just following the trend in general, we haven't invalidated anything yet. This is not a change of character or a BOS, anything here. We didn't break anything. This here from this low to this high is our structure. Okay. This is not structure. I know I did make the Discord public, so there is a public section for anyone that is following me on YouTube or anyone that is following me on Instagram that wants to just be a part of the community and be able to chat with the people in the community. You are welcome to join. You will have access to see this video or like the weekly analysis as well. That is my gift to you, right? Just, you know, following me and being a supporter. So now this low to this high is our structure. This low to this high is not our structure. So this is not our structure, guys. From this low to this high. I know some people probably learned it this way, but this is not our structure. This is our structure. From this low to this high. This is where buyers got in, right? This is where the accumulation started. This is where the distribution started. This is our leg. All right. Not gonna get too in detail with that. This could be a very long video if I get into structure. But for those of you that are in the mentorship, for those of you that have watched the mentorship videos, you understand, right? So and mainly because this didn't pull back to 50%, guys. It's really that main thing right there. If I pull my fibs from this low to where this high started, we didn't pull back at least 50%, right? If we would have pulled back at least 50% and then went higher, then okay, we could have set this low to this high to this low to that high. Then we would have seen actual distribution of sellers. We would have seen buyers get in here. That's our reaccumulation. Sellers get in here. Buyers get in here again. That's our pullback. And then we see our next leg. So then we could say low to high, right? We're not seeing that. So this is our high. And then you can see, obviously, if I pull my fibs from this low to this high, you can see we definitely come back to 50%, right? So now if we do make a new high, now it's low, high, low to whatever high we make here. Okay. So that's the simple thing right there. So yeah, I do expect DXY. I could see it continuing higher. We're gonna see what happens with all the fundamental news that's coming out. But I could see higher prices there on DXY. So let's get into the technical analysis of these EU and everything like that. So as you guys know, on what I was talking about on EU, we did have potentially some good price action towards the upside, right? But that may change this week. All right, this week's gonna be a little bit in the middle. So here's what I'm looking at, guys. So if DXY is gonna be very important. If DXY continues higher, we know that EU, GU, and the dollar is gonna get strength overall, which is gonna drag EU down, which is gonna drag GU down, right? We know we're gonna see lower prices on EU and GU if we see a strong dollar, and that is potentially setting itself up right now. So I'm gonna give you guys two scenarios of what to do and what to look for in both cases, because right now, put this right here. Let me delete all of this analysis here so far. Like I said, I haven't looked at these since Friday. So what do we have? Our last analysis from EU, we know this is our overall leg, right? This is our supply zone. This is where we're hoping for the market to get into. The market came up here. We did not get into it. We're like short 40, 30 pips, right? I'm gonna average it out to 40 pips. This is our high to our low, right? This is our main leg. This is what we're following. This is our market cycle. Inside of the market cycle, we have order flow. Okay, this is our order flow here. You can see the dots, low to the low, high to the low, high to low, right? Change of character. Change of character allows us reversal opportunities. Okay, so here is our first reversal opportunity. Is going to be right here. This is going to be the first area we're going to look for potential buying opportunities. I would not recommend a limit order here. No limit order. Okay, we're going to wait for the market to get into here. We're going to wait for an accumulation. We're going to wait for something that shows us interest, that shows us buyers. Just because DXY may continue going higher, we want to see buyers actually show themselves here. This is why it's labeled as yellow, right? It's a decisional point of interest. So on the contrary, what I do want you guys to look at as well is potential selling opportunities. So here's what we're gonna do. We have a change of character here. Sorry, change of character. Boom. Why is this a change of character? Here's our accumulation. They gave us the impulse to the upside, right? We have a valid manipulation of lows. So this area right here getting invalidated, especially after the market is trying to accumulate here, and I will show you guys that in a second. Here is our accumulation. I got invalidated. You see the market mitigating this area, bouncing, mitigating, and bouncing higher until we break lower. So what does this look like to us, guys? What does this look like to us? Manipulation of liquidity. Here's that manipulation right here. Manipulation of all of this liquidity creates a change of character. What else do we have? Another manipulation right here. So let's see, do we tap back into here? Yep, there it is. We tap into 50% of the previous manipulation, and we took out London highs, right? We took out the London Open, Frankfurt, whatever you want to call it, highs. So we mitigated the previous manipulation. We're going lower. So this is what I would tell you guys to do. Let me take this out here. We're going to look for sales here. We're going to look for buys here. No limit order on each of these areas. The only area that I would want you to set a limit order at is up here. If you're going to set a limit order and you just want to set in an entry somewhere, you don't want to, do the entry confirmations, and you don't want to do the extra looking on the lower time frame, this is where you set an order at. Okay, these areas right here, we're not going to set orders because these are decisional points of interest. We're kind of in the middle right now, right? The market could go higher because we do have a change of character. So we do have reversal opportunities. It does allow us to take buying opportunities, but following the overall momentum and following the market cycle is still technically bearish, right? Especially since we're using DXY as well. We're using DXY for our directional bias of how strong the dollar is, and we're seeing that we're potentially getting a reversal here. So we're potentially seeing that the dollar may continue to strengthen, right? If the dollar continues to strengthen, no matter what this price action looks like, no matter what's going on EU, if DXY goes up, EU is going to go down. Certainty. Like, it's certain. There's no speculation there, right? This is how the markets work. So we're going to use that to our advantage. If we see potentially DXY is going higher, we need to be able to adjust our directional bias here, right? So what we're going to do, when the market comes into here, 50%, this is where I want you guys to start looking for potential selling opportunities right here. Hopefully we get like a move higher and we get Asian session coming in here. Markets open up in like 30 minutes for me. So hopefully we get something like this. We get some liquidity, manipulation. This would be the best setup. And you take that trade to the downside, right? And then potential hedging opportunity here, guys. And this is exactly what I want you guys to do. I want you guys to hedge this if you can. We're going to try to get the sell here. And we're going to try to get the buy inside of here. Okay. So those are the two areas that I'm looking at right now in EU. Honestly, if you want me to be 100% honest, if I would tell you like which side to go for, if you're not the hedging type and you want to, which is the most optimal, go for the selling opportunities. Go for the selling, right? Wait until we get down here. I would look to sell first before we try to buy this, just because of directional bias. Guys, look at this market. We've been bearish, right? Sellers have been in control of this market, right? We have not taken out any major area. Like over here, this is a major demand right here. This caused this whole push lower. Okay, we can see we're breaking internal structure, our order flow, but we haven't invalidated any major areas like this or these highs. That's part of this huge push lower. Okay, we're seeing a potential pullback, and this is why we were trying to look for buys. But if you want the most optimal directional point, we're going to look for sales. Okay, this is just a hedging opportunity to see if we can get a pullback here, if we can get a reaction. from this area. Okay, we want to have multiple scenarios. So the most optimal thing I want you guys to do is to look for sales following this potential bearish trend right here. Now, of course, if the market breaks this high, guys, let me zoom into here. And this is the power of hedging. So let's say we come down here and the market, you can see an accumulation, right? You see accumulation, you see a lower time frame. Boom. Let's say we take a buy here off of this accumulation. If you're going to take a buy off of this accumulation, stop loss goes underneath the lows. It would go underneath this low. Boom. Stop loss goes underneath the lows. Okay. That's going to be your most optimal way to take confirmation entries. Okay. Have a decent stop loss. And that's something that I'm going to talk about regarding stop losses, take profits, and just everything like that. And just to make it more simple for you guys to take your trades and not overthink it. Do not overthink your stop loss, right? Just put your stop loss where it needs to be. That invalidates your trade. Okay. So boom. We see an accumulation here. Entry goes off the accumulation. Once it confirms, stop loss goes underneath the point of interest. All right. Now, when the market goes higher, and let's say we come into this area here. So we come into this area here and you're in a buy, but then you start seeing a sell. So you see a distro, take this too, stop loss here. Now you're in two trades. This is what I want you guys to do. This is going to be the best thing you can do this week if we do get the confirmation entries. Try to catch both areas, right? If you get into both areas, you have a perfect hedging opportunity to the point where now if the market goes higher and you get a stop loss here, this trade is still in profit. If the market goes lower and you get a stop loss here, this trade is in profit, right? That is the goal here. Okay. Try to do that. That's what I want you guys to set yourself for, is that hedging opportunity on these areas. Now, like I said, if you don't want to do that and you think that's extra work and you're not that advanced, look for the sales. Okay, look for the market to react here, look for a pullback into here, and look for sales to the downside following the directional bias. Usually by like Monday or Tuesday, I will update you guys on this depending on what DXY looks like. I will update you guys on this probably Tuesday if we get some movements on Monday. Mondays usually can be slow sometimes, so we got to be careful on that. All right, now moving on, let's go to GU. Look at this, guys. Look at this right here. Perfect mitigation. I'm gonna zoom in. I want you guys to look at something too. There's the distribution, right? There's the distribution. If you go back to our last market analysis, I told you guys to look for the distribution. If you're not going to take a limit order from this area, and this is why I have these areas like this. These are high probability areas, guys. When you see it's red, when you see the demand zone is, the supply zone is red, or the demand zone is blue. If orange, not orange, but yellow for me is decisional. So it's, it's 50-50. But when I have the red areas and my blue areas, those are high probability areas that I set. So if I tell you to take a limit order somewhere, it is a high probability area because I would set a limit order there, right? So looking at this, we talked about this last week. I've been talking about this all the couple weeks in my past market analysis. You could, back test those analysis, do reviews, and see if what I'm talking about actually is happening on the charts. Okay, so what am I expecting? Of course, I'm gonna expect GU to continue lower. We reacted off of supply zone. What can we do now? If you miss this entry off of this distribution, where's the distribution? The distribution is right here. Okay, so here's our distribution right here. We have the selling. What do we see? 1, 2, 3 drives. We break beneath right there. That's our distribution. The market goes lower. Okay. So now what do? We missed the distribution. Let's say you missed the distribution. What can we do? What's the update? The same thing that we saw on EU. Here's our manipulation of liquidity. Manipulation of liquidity right there. Here's our redistro right here. So what I would wait for, Wait for the market to push a little bit lower. It's going to be your selling area here. Wait for the market to push a little bit lower. Wait for us to confirm this break underneath this low. Look for a pullback into here. Another distribution, right? This distribution, right? Once you take this distribution here off of this area, stop loss goes above this high, let the market go down, right? Once you start seeing the distribution confirms itself, exactly what you've seen here is what you're looking for here on the lower time frame in this area. Once you see another distribution here, you can take your sell, put your sell above this high, take your sell to the downside, right? We're going to still look for buys in here, guys. We're still looking for buys in here. I would love to get a sell first. And I'm also going to change this area too, because I was expecting us to, this is not a high probability area no more. And I'm gonna explain why this is not a high probability area no more. So I would love for you guys to get the buys first, right? The most optimal entry here, the most optimal direction is going to be looking for the sell. I'm sorry, I think I said buy first, but I was looking for the buy first. I wanted us to buy into our sell, but the market just went straight higher into our sell. So now we want to sell into the potential buy. Why? Because what's the directional bias? We're bearish, right? We can see from this high all the way down, we're bearish. We can see the market has just been going down since then. This is our only turning point here. And I think we pull back into 50%. Let's see. There it is. Yep. Here's our 50% pullback of this whole entire leg that taps into a point of interest. So now we can see another push lower, right? Following structure. So this area now becomes a decisional point of interest. This was a high demand area at first. It was a high probability area because the market was just starting to break higher. Remember when I was telling you guys, let me delete all of this stuff. And gals, guys and gals. Sorry, auntie. She knows. Guys and gals. So remember when I was telling you we had this imbalance here and we were going to use that demand zone here to buy into our imbalance and to target our supply. Well, now this demand zone does not have a it doesn't have an objective no more, right? We were going to use it to take us higher into our areas, but now we're already into our areas. We already tapped into our areas. So now we have to switch our sides. Okay, we're going to have to switch to the selling side because the direction is bearish still. So first, we're going to look for the market to close underneath here, wait for a pullback, wait for our confirmation, take our sells, stop loss above this high, and target that area. Once we get here, if you start seeing accumulation and you start seeing that, then you can hedge. I want you guys to only hedge if you catch a sell, right? If you get into a sell on GU, then you can hedge here. But if you don't, I don't want you guys to hedge that. Okay, I want you guys to wait until the market gets here. Wait for a reaction, because most likely we will get a reaction, because most likely we could do something like this and go lower. Use that as your next entry. If I see something like this, we see a reaction off this area, we see an accumulation, the market goes higher, and then we break lower. Once we invalidate this, whatever the reaction, whatever the pullback was, we can use that as our sell to take the market lower. Okay, so once we see that, that's how we want to play this market. All right, moving on to gold. As predicted, we were predicting a new high. So here's our new high on gold, guys. This is where you want to be less aggressive on this market. Once the market makes new highs like this, we're going to wait for more structured plays. I don't like to be aggressive because right now we're in no man's land. We're not in discounted pricing. We are in premium pricing at this point. This is where people want to sell. Everyone that was buying gold right here, everyone that was buying gold, even everyone that's been buying maybe dollars cost averaging, whatever they were doing, this is price discovery. We're in price discovery right now, guys. We are all-time highs. We know we do not be aggressive at all-time highs. So what are we going to do? What are we looking for? We're going to look for pullbacks. We're going to look for our structured plays. First area, it's going to be right here. Tiny zone, tiny little area. You can see why it's yellow, right? It makes sense why this one is yellow, right? This is not somewhere you want to set a limit order at. Do not be aggressive here, right? This is just an area to watch, okay? If the market comes down here, this is equities open. This is where the market opened. We can see we had a little spike to the upside. And since then, the market has been pushing higher, right? This was on Thursday. Right now, the market's coming lower. We seem like we're forming a distribution. So if we see the market coming here, we start forming maybe a little accumulation or something, we get a reaction, then maybe you could start playing it higher, okay? Just wait and see what the market does in here. It's not something for you to be aggressive at, okay? If you want to be aggressive in this market, let me give you a rough area. Go to the daily time frame. This is the candle where you're going to be aggressive at. This is near the 2,750. This is near our institutional price point. Here's our accumulation right here. I want to give you guys a specific candle or something to look into. This is where I want you guys to be aggressive, right? If you're going to be aggressive on this market, this is the demand zone we're going to look for. We're going to look for a pullback into here to look for more buys, okay? If that does not happen and we just bounce off of here and go higher, that is okay. What do we do if the market just continues going higher? We look for reaccumulations. What does reaccumulations look like? So let's say the market just says, fuck all you guys, I'm gonna go higher. Excuse my language. Excuse my language. All right. Let's say the market just says, you know, forget all you guys, let's gonna go higher. Boom. We're gonna wait to see our distribution, wait for the invalidation of distribution, mitigation, take it higher. Okay? Something simple as that. Next target on gold is going to be the 3,000. That's going to be a far target for now, but we can get there. We're all-time highs. So, yep, that's going to be my thing on gold for now. Just watch it. Like I said, we're all-time highs. Don't be aggressive. Be patient. All right. Let's see. USD CAD. I'm not going to get too in depth on USD CAD. I don't trade this market, USD Chef either, or AUD CAD. But what I will tell you is I can bet my money that USD CAD and USD Chef will continue higher, or they're looking like they are already looking like they want to go higher. USD CAD has a huge reaccumulation. It's kind of ugly. It was a range at first, but now it's looking like we're going to reaccumulate. And I believe the reason why this is happening is because of DXY. DXY doing its small little pacing, and you see how it kind of slowed down and we're getting retracement. That's going to affect the US CAD. Reason why, it's a pair correlated with the dollar. Okay, so if the dollar goes higher, USD CAD is going to go higher. All right, that's one thing I want you guys to pay attention to. So with the DXY potentially, quote unquote, potentially getting stronger, we're going to expect USD CAD to continue higher, USD Chef to continue higher, right? So the motto, which I believe I say in every video, is XXX USD and XXX. Well, that was completely wrong. USD XXX. Make this a little bit cleaner, right? Dollar is going higher, XXX USD goes down. That's EU, GU, EU, GU, AU. These are some ugly writings, but we're gonna ignore it. USD XXX, dollar goes higher, this goes higher, right? Because we have the dollar in front. And then here we have the dollar behind. Okay. So if USD goes higher, then USD CAD, USD Chef is going to increase. It's going to be stronger. Okay. So that is very important. I believe I say this like every video because literally it is very important. Literally, if you're trading any pair correlated with the dollar, you gotta watch DXY. Okay. It's literally giving you free information on what the economy of the dollar is looking like. Well, my economy, the US economy. So dollar goes higher, those go higher. Dollars go lower, EU, GU, and all those go lower. Okay. It's not much correlated to gold. I'll tell you that right now. It's not the same with gold. Gold is a commodity. These are currencies. Currencies affect the economy a lot more than commodities does. Currency prices reflect off of the economy more than commodities does. That's what I mean. All right. So just by looking at this, guys, I'm gonna give you guys blank statements on what I would look for here if you are trading the USD CAD. All right. Wait for a break at this high. Once we break this high, here's your manipulation. That's gonna be your first area that you want to play from because we took out these lows. You guys can see it with all my setups, and that's one thing why I like doing these market analysis. I want you guys to see how I'm looking at the market and what I'm looking for. I'm always looking for a manipulation. I'm always looking for a BOS. I'm always looking for liquidity to get taken. You can see it's the same setup that I'm repeating. Why? Because this is something I've back tested. These are the rules that I'm looking for. I'm already setting up my rules on the market before they make them. So I'm already predicting. I've already seen, okay, boom, we got a manipulation. We took out liquidity, check, right? That's two rules, checked out. Boom. What do we need? We need a BOS or a change of character or a BMS, something that shows a break of structure. We haven't gotten that yet. So that rule is not confirmed. We need that rule, right? Boom. Once we make that rule, now I know it is okay for me to look for trades inside of this manipulation because this manipulation was able to take out liquidity and we got a BOS. That's all my rules. Now I can look for trades inside of this manipulation. So that's what I want you guys to do. Or if we continue going higher and we do not pull back and we just continue going higher, then we're gonna look for the same thing I said on gold. Look for the distribution, right? Look for the market to go down, wait for the market to break the distribution, right? That 1, 2, 3 drives that I showed you guys on GU, that's what I want you guys to look for. Once we break that, you look for the mitigation, you continue higher. So let me give you guys a good example, and then we'll go to the next one, which is USD Chef. Make sure this music's playing right. All right, let's go to GU. That's a good little example of that. There it is. I missed it. All right, here it is, guys. 1, 2, 3 drives. Wait for the market to go lower underneath it. That'll be our liquidity. Ooh. And then see this move right here that did not happen. So let's go and replay. Let's put it right there. Boom. Now, I would wait for the market to go all the way up and break this high. Not these highs, this high. This high has to be broken. Once that high is broken, let's go down. Let's go to like the 30-minute. I'm going to show you guys something. Let's go 25. 30-minute was perfect, actually. See this candle right here? If this was the reaccumulation I was talking about, this would be our manipulation. You guys can see this candle right there that went underneath all of these lows. If the market was to push back higher, this would be your area that you would look to take a trade to the upside. But this distribution completed itself, right? We can see this distribution did not invalidate. So this is a confirmed distro, right? This is not a reaccumulation. We're not looking for reaccumulations here. Why? We're in a point of interest. We're going to expect the market to distribute here. We actually want to see this here. All right, there's a difference. I want to see this distribution play out in my supply zone. Okay, here, I want the distribution to be taken out. Well, not on USD Chef. We'll get to USD Chef. But on USD CAD, once we take out this high, of course, we're in the middle of nowhere. There's nothing here. There's nothing to the left, guys. What are we reacting from? We're about to make new highs. This is what I'm talking about. You're gonna have to wait for the structured plays, right, on USD CAD. All right, moving on to USD Chef, right? I don't want to make this too long for you guys. So what can we see on USD Chef? We see USD Chef went underneath this liquidity here, and I'm gonna just keep it on a lower time frame. We can see we went underneath this liquidity right here. We went underneath Asian lows, we went underneath London lows as well, and we tapped into this area here. You can see this area here took out liquidity. Minor, right? We barely went underneath that previous Asian session. We went to the upside, and you can see we're doing it again. Came back underneath all of these Asian session lows and London session lows, and now we're doing it again. So what are we going to expect? We're going to expect this market to continue pushing higher, right? We're going to look for that break to the upside, pull back into this. That's going to be your trade to take us to the upside, right? USD Chef did a weird thing. I know we were looking for the market to buy somewhere here, but this is going back to support my thesis on what I was talking about with DXY. So you can see how I think this right here was our POI from this low to this high. This right here was our demand zone, right? It was a decisional area that we were thinking about, we were looking at. You can see how the market was starting to accumulate here, and then we got this huge manipulation that ended up breaking our low, which gave us our change of character. And look what happened. We immediately rallied back up and breaking the high, change of character. So you can see how order flow immediately changed, right? We had bullish order flow, and now the market went lower, broke it, gave us a change of character, and now we're going back, breaking the change of character again. Why did that happen? That's why that happened. This right here, DXY. This is why that happened. DXY went ahead and turned around right here, and we're seeing these major buying, right? We're seeing the market starting to reverse and go back higher. I told you guys, DXY going higher, UChef is going higher. It doesn't matter if the market broke this low, we create a change of character. It doesn't matter if we're in a demand zone, if we're in a supply zone. Fundamentals obviously are going to be over everything, but we're not fundamental, head gurus. We're not going to stick to just, fundamentals, everything, fundamentals over everything. No, we're still going to use our technical analysis, but we need to understand that the market can move and disrespect our technical analysis. Always understand that, right? Technical analysis is not the end all be all. It's what gives us our probability in our high probability areas, but we still got to remember that, hey, this is not 100% every single time, guys. Just remember that. All right, let's move on to ACAD. I think the market just opened and we spiked higher on ACAD. Yeah, look at that. Look at that. We gapped higher, guys. Market just opened. Oh, DXY doesn't open yet. Look at that. Gapped higher here. ACAD gapped higher here. US 30 is not open yet. Gold is not open yet. US 30 is not open yet. All right. So before even finishing my sentence, on ACAD, I'd be looking for the same thing. I'd be looking for us to break this high here, and I'd be looking for bias to the upside. I don't really trade these markets, so I'm not going to get too deep in, informational with them. But I do expect us to continue higher, guys. Let's go to US 30. Let's talk about what happened. So here's two things I'm seeing here on US 30, guys. So I ended up closing my buy that I had. Right, as you guys know, I was buying the market from like right here. I ended up closing out once we got this huge manipulation down that almost took me out. Right, once I seen that, and then we came back into here, I closed it at the end of the day. Okay. On Friday, I actually took a loss here on US 30. I took a loss trying to make a new high, We still have not made this new high, which was kind of annoying. I was pretty confident we were going to make a new high, but we did not make the new high. So I ended up taking a loss there. I think it was somewhere around, let me see where I bought it at. Yeah, it was off this accumulation right here. So basically the setup was accumulation underneath Asian lows, right? We're already in a bullish market cycle. So it was that kind of setup, and you can kind of see it end up being a loss. The market just continued lower. Okay, so we end up taking a loss there. So now I'm kind of just waiting on US 30. I'm going to wait for us to come down a little bit more. I want us to see if we can come fill this imbalance and could just come back into this demand zone, or just overall this area. It doesn't really have to be this specific area. The reason why I have this marked out is because this is equities open. So this is the last, area before we had this huge push, and you can see it's what created this imbalance, right? We don't have no imbalance before this equity open. So this is where it would be like that specific zone that I'd expect something or a reaction out of. That's what I'm looking for. Looking at it in general, you can see as well that the 50% lines up with the imbalance. So I know at least we can come down to the 50%. This is an institutional price point. We're at 44,500. We could bounce right here. We did come underneath liquidity. So we have a lot that could potentially happen here. So I'm looking for two, maybe three scenarios here, right? I'm looking for either we're going to respect this institutional price point right here. It's the 44,500. You can see the market has reacted off of this many times. So this is why I would expect us to, respect it. You can see we have a reaction here to the downside. We have another reaction here to the downside. So we have respected this area before. So I want to see when we open up, maybe Monday morning, if we see the market just sits here and we just range here, maybe we create Asian session and we manipulate. I have to see the manipulation, and then we have to see a closure above the manipulation. I'm not going to play a play like this where I'm looking for an accumulation underneath Asian lows, because technically right now we're not in the same bullish, bias that we were before. Okay, we're creating a distribution here. We can see that major distribution that's being created. We can see the market is struggling here. So we know that sellers and that buyers are kind of slowing down at these prices, as they should, because, look where we're at. We're at higher prices, right? So if we do see that, I want to see we see a manipulation and then a closer with a BOS, and then we could possibly play that off of this area to take it higher. If not, then I'm going to expect this to continue lower and try to buy from here. Anywhere underneath the 50% of this area is where I'll be looking for potential buying opportunities to continue us back higher and see if we can actually make that new high. All right. NAS, we filled the imbalance that I was looking for, right? I was honestly looking to see if we could play this area. So this area is still valid. We tapped into this demand zone right here. So let me put this like this. Well, actually, no. This could still get mitigated. Hold on, guys. This could still get mitigated near the 21,000. This actually might be the most optimal area to get into this right here. This is near the 21,000, so it's near the institutional price point. Look how much bounces we have out this area. So one or two things, guys, one or two things that I'm looking for here. We're still inside of this manipulation. You can see the distribution here that caused the break higher. That's still potential play, right? We're at the 50%. If the market sits here and we create something the same way that we're looking at on US 30, we're gonna look for manipulation of the lows, and we're gonna look for a push higher, change a character or a BOS, and we're gonna try to take this back higher to make new highs, right? We do have liquidity sitting up here. We have equal highs, so we have something to target. If not, if we end up breaking this low, I'd be looking to see if we're gonna get a reaction from here near the institutional price point. All right, that'd be my second area that I'd look for. And I would put this as a decisional area. I wouldn't keep this as like a as an area, because I don't want you guys being highly confident inside this area. Reason why is because I could easily see the market come down here and create like a large accumulation. So I could see something like this, and we could break this area, tapping back into the 2100, which is our institutional price point, and then go higher, right? I don't think the market's just gonna sit here and respect this area by itself. I think the market would react here based off of the fact that we have an institutional price point. The reason why I had this area marked out and why we still want to look at it is looking on the lower time frame, we can see that we do have a manipulation of liquidity. We still have imbalance here, and we have an impulse. So we could still react here, but don't be surprised if we go a little bit underneath it and try to mitigate the institutional price point. All right. Another thing that I do have to cover is, let's see, Jake asked me to cover UK 100. Let me see what that's looking like. Let's get it on FXCM. Let me make sure this is the correct one. Yeah, this is it. All right. Let's go on the 1 hour time frame. Let's see. Okay, so he was looking at, yeah, this is it. This is it. All right. Yeah. All right. This is it. This is it. This is it. Okay. He was just zoomed in. All right. That's cool. Okay. So obviously we have a bullish push, right? We have a bullish market cycle. We do have a confirmed redistro right here. Confirmed reaccumulation. I'm losing my mind, guys. We have a confirmed reaccumulation. So we have a confirmed reaccumulation from the low to the high. Market's going higher. Let's see. So, I mean, obviously, Jake would know that this would be the most optimal area here, right? This right here. Boop. Most optimal area. Let me zoom out. I want to see what the higher time frame looks like. Okay, well, I see why. This is it. Okay, so yeah, most definitely. This would be the most optimal area for now to look for buys. Other than that, look for reaccumulations, man. Yeah, I definitely wait for a reaccumulation or for us to come down in here. Honestly. Yeah, that's what I would look for. I wouldn't be too aggressive. We're at all-time highs. So, yeah, most definitely wait for a pullback back into this area. It doesn't have to come to the 50%, but as long as we are back within this area here, then you can start playing around and you can maybe get a little bit aggressive. It doesn't particularly have to come into the 50%. I don't want you playing around in no man's land. As long as you're underneath this line right here. So let's say the market comes down here and we see Asian session and you get a good setup. I don't want you to not take the setup just because we did not tap into this area or into the 50%. We don't have to, right? It's the most optimal area as we know, but we don't have to. As long as you see the market pull back and you're not playing in no man's land. All right, I don't want you playing in no man's land. So either we come back into this area, we get that buying opportunity somewhere inside here, or we see that push above this high, and then you can use this area to take the market higher, right? I don't want you playing in no man's land. So yes, you are correct. These areas that you're looking at, he did send me his own analysis. So those areas that you are looking at, yeah, those are the same areas I would look at as well. As long as you're coming back into discounted pricing, which if I just put this up here, boom, here's discounted pricing, right? So from this low to this high, this is where you want to buy at the 50%. Anywhere underneath here is where you want to buy. This is going to be your most optimal area, but doesn't mean the market can't react from here and still go higher as long as it comes back into discounted pricing. All right. And then last but not least, let's check Tesla. Let's see what's going on. We can see Tesla is still respecting this 400. We might just hold here, guys, for a little bit. I could see us still coming back lower into this area. This is still the most optimal area here. Honestly, if we break this high, then you can start buying from here. Okay, once we break this high, then I would tell you guys to start getting back aggressive and start looking for more buying opportunities. But until then, it looks like we're just creating a range right here. So I would wait until we either break this high or we come back into our reaccumulation down here and get a buying opportunity. Okay. All right, guys, that's going to be the video. If you guys have any questions, any concerns, let me know down in the comments. If you have any specific pairs you want me to cover, if you have any specific questions on any of these concepts that I'm talking about, please let me know, and I will try to make a video explaining these concepts a little bit more for those of you that are new, those of you that don't understand, or you just need some guidance, right? But if you have any questions, any concerns, any pairs or anything like that you want me to cover, please let me know. I will see you guys in the next one. Peace out.